I know that music, I've heard it probably at least two or 300 times by now, Matt, but it fires me up each and every time. Whenever we
The
start our
beat
halftime
does.
report, I love the beat. Yeah,
Yeah,
for
the beat does.
sure.
The beat
I
does.
love it.
The beat is amazing. It's high quality that we get from Camtasia.
Hey, man, take it where you can get it.
Yeah.
Welcome out to our halftime report and a late belated Merry Christmas yesterday and over the
Merry Christmas,
holidays.
everybody.
Holiday season as well. We are back from a few day hiatus as the holidays kind of took the market down. We need to now analyze why the market is rallying. Matt, how you doing today?
I'm doing really, really good. Not as good as the breakout on silver, though.
I love that silver chart. That's maybe
Yeah.
the best chart in the market for me today. I've been waiting for a break at 15 for a very, very long time. Metals are such a big focus of what we watch, Matt, and what we invest in and what we use as economic indicators and also, great investment vehicles. But silver breakout is huge.
Oh yeah. If we've been waiting for that silver breakout on 15 for about 3 months now,
Yeah.
and really kind of ever since we've been doing the halftime report. If we break out, we get sidetracked and get faked out here. Ooh, ooh,
If we break out,
ooh.
sidetrack, and get faked out, I can't worry about all that. I see
Yeah.
a breakout, I pull the trigger.
Oh no, 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 no.
I'm a robot.
It's not hard. This trigger is not hard. That
That's
trigger
right.
is very, very good trigger on the daily candle. You look at it on a weekly candle, it's got reversal type characteristics all around. Look at that beautiful W formation there on that weekly chart, Tim. Look at
Mhm.
that breakout on that weekly chart. Projections got to be up to 16 in my opinion, but we can talk about silver here when we go through commodities.
I think 16 and a quarter would be a good target. You've got position style trading, targeting in place. You could delta trade this. You could also do something more complex. We'll break that down here in just a minute. Let's start with the broad market, if you would, Matt. The ES contract. Obviously, the big news over the weekend was Treasury Secretary Mnuchin. And I think I said that right. I know we call him Munch Jr. or whatever it is. We've got nicknames for our Treasury Secretary. What were they, Matt?
We had a few of them, but he doesn't have a good nickname yet. We have to find him a good nickname.
He's the
Nobody wants to
foreclosure
say
king.
the foreclosure king. Well, that's
Yeah.
a great nickname, but we should give him a new nickname for being the head of the PPT.
The PPT, he's like the captain of the ship on the Avengers for the PPT. There's like got to be a cartoon that we could play up
All I
right.
know is all I know is one time I was at a legacy education event and I was teaching for legacy, and Bo Moody was my manager, and I was ragging on the PPT pretty hard. This is before Mnuchin was the Treasury Secretary, and I'm sure I was saying something about Bernanke and Paulson and everything that was happening in 08, 09. And Bo just starts getting up there and starts singing the Naughty by Nature song, dancing. But instead, he would do like, yeah, PPT, yeah, you know me. It was pretty funny, but I still don't know what his nickname's going to be.
I don't know either. I mean, you got to earn nicknames, first of all. And obviously, this whole thing with the PPT is now bringing him back into the news. I stopped talking about Mnuchin a while back. I remember when he was involved in the G20 meetings and all that kind of stuff. He's kind of gone quiet, but President Trump does not want to allow that to kind of go by the wayside. Obviously, he keeps going after the Fed. He didn't so more over the holiday, even on Christmas, Matt. He's going after the Federal Reserve, painting that narrative. There's no doubt about it. So break this down for everybody out there, because we did a whole podcast on this, a big long one, and it does explain the situation. What happened and what did it mean to the market? Markets got spooked on Christmas Eve. We're rallying back today, but
Markets are
explain that
skittish.
context.
Markets are skittish. There's a lot of fear out there in the market. A lot of bear market, bear market, bear market is starting to get into the headlines. Selling is starting to increase. Liquidity is becoming a concern. And coming out of the central bank meeting from last week, where basically they were talking about taking a step back from the interest rate hikes, but also keeping up the pace of reducing their balance sheet, which is one of the biggest concerns that the market has had from a liquidity perspective. So here's old Steve Mnuchin, who is the Treasury Secretary, and he gets a call from President Trump while Steve Mnuchin is down, I believe, down in Cabo for a holiday vacation down there, and he was basically called to bring the PPT together and to try to soothe and calm the markets. And what he did was on Christmas Eve or the day before Christmas Eve, he basically called a meeting of the 6 largest banks in the United States and was asking them questions on if they have liquidity concerns, if they can handle a bear market, and so on and so forth. And this just spooked markets. And I felt at the time it was a really, really bad decision from Mnuchin to do that, just simply because the markets aren't bearish yet. I mean, it's volatile, don't get me wrong, but if you look at the economy is not bad. We're not seeing a bad economy. We're not seeing a slowing economy in the US to a certain extent. In fact, we're supposed to pick up pace to 2.9%, and we've been averaging right about 2% for the last 10 years. So, it was really weird to see him come out there and try to calm the markets when on one hand, President Trump is saying that how great the economy is, the best economy we've ever had. On the other hand, we hear Steve Mnuchin bringing the PPT together. And for those of you who don't know who the PPT is, it's the Flood Protection Team that was created in 1987, dubbed the PPT in 1987 by the Washington
Their official
Post.
name's the Working Group on Financial
Working
Markets,
Group on
right?
Financial Markets,
Which is very Orwellian. I mean, it sounds just
everybody
cryptic.
knows it's the PPT.
Right.
And I'm not a fan of the PPT in general because I don't like manipulation in the markets, and they front run markets every now and then. But in terms of this, that's what happened, Tim, and it just spooked the markets on Christmas Eve. And when there's not a lot of news coming into a very short, and this is my biggest disagreement with the Tim. It wasn't that they came together. It was I would not never have made that call. I thought it was a bad decision, but to come together on Christmas Eve where you have very little volume, zero news coming out there, and this dominated the headlines, and you saw the market just get absolutely smacked in its face on Christmas Eve. And we're seeing a little bit of recovery here, Tim, but that's all that I'm taking this as, is a little bit of short selling, coverings, short squeezes happening. There's not a lot of things happening today to drive the market back up. It's just, to me, it's a technical rally. It's an overextended rally. And if it does rally, it wouldn't shock me to rally to come back up into 2,500. But Tim, if it comes back up into 2,500, watch what the traders do.
Here's the thing about it. And everybody out there, if you're halftime crew, hashtag halftime crew, and welcome. It's always great to have you guys back. I missed our show here, Matt. I love doing it.
Missed them too.
I loved it on a daily basis. We all know that when we start breaking down the individual charts, and we're going to do that as we go through the halftime report, they're all going to be bear rallies. So rejoice, embrace it, trade what you see, get aligned, and keep your beta weighted delta in line with your portfolio posture. Now, that's just what trading is. You trade what you see. Right now, we've got a bear rally developing, Matt. We got to give it credit. And by the way, the heat map is impressive. Go over to Tackle Trading or FinViz, anywhere you can get a heat map. Give me a green one. It is so bright green. I've not seen it this green in a very, very long time. So if you're a bull on the market, you have to enjoy and appreciate the nature of the color of this heat map. Google up 3.5%, Amazon up 5.5%, Disney exploding, Facebook up 5.5%.
I agree with everything you just said. But Tim, most of the shorts are getting out right now. That's what's happening. That's what's kind of driving the market back up to a certain extent, bro. So, I get it. Bulls rejoice. Amazon, Microsoft, Apple, Bank of America, MasterCard, Google, Facebook, all of them up 2, 3, 4, 5%. But this is coming off them all being down 20, 30, 35, 40%. So yes, bulls rejoice, but a lot of this bullish movement isn't people coming in and buying a massive amount of stock in Google or Amazon or Facebook, Tim. A lot of this price movement, and this is where you can get some false flags and some false signals, is a lot of this price movement is short covering. And that's what people need to understand, that when the markets come down like this, you're always going to have these snapback rallies coming back up into resistance. And what not all of it, but a lot of what causes that is everybody who is short going into the breakdown of support at 2,500. Once it starts hitting their price targets, Tim, they start buying back stock to close their positions. And then you have short squeezes that the market automatically puts out there as well. So yeah, I mean, let's take a look at a couple of those charts, Tim, just to give a little bit of context. So Amazon up 5% today. Okay. You buying that?
No. No, I'm not. Not trading it, not buying, not in the bullish direction.
Okay,
no,
so Facebook, you buying that?
No.
Okay, let's go with Apple. You buying that?
No, it's
Okay, so
bearish. It's been on our bearish option report list for a long time, right?
and you know what, Tim? When it rallies into 160, doji's at 160 and pivots back down, it'll be on the list again. So my point is that when you look at the heat map here and you're like, oh my God, Amazon, Apple just doing good. I mean, the market must be absolutely amazing. And then you look at the market and you're like, okay, the market is completely overextended to the downside. Yes, the market's going to show some bullish tendencies coming back into resistance. This to me is a false. It's starting a bearish retracement is what it is, but it's a false flag to give those consumers a little bit of hope before the next leg goes down lower.
Oh, traders and their heartless logic. They don't want to just rejoice. They want to point out all the problems as well, which is what we need to do. I'm joking here, obviously, but the charts are not going to be good, Matt. They're all going to be bearish retracement setups.
Yeah.
The big rebound, in my opinion, was just it was due. We thought it was going to happen on Monday. In fact, this whole thing with the PPT and the reason why we podcast about it on Monday is it should have happened on Monday, but they screwed that up and it made the market sell off another day on Monday.
If Steve Mnuchin would never have made that call to the six banks, and by the way, the CEOs of the banks had no clue what they were doing. In fact, all of them were like, yes, we're good. Yes, we have stress tests. Yes, we're good. And that's another thing. What the hell are we doing? I mean, really, there are bank stress tests that test liquidity levels and test these things, and they go through them every single year. This was a political ploy, and that is all it was, and it spooked the markets. But yeah, I mean, we're a day late and dollar short coming into this rally, but it was expected coming into this week.
Yeah, absolutely. And, it's been a few days since we've been here. So let's do a full technical breakdown of all the different indexes. Back on the ES contract, if you would, we are rallying intraday. It did attempt even a short position where it was selling off there on the intraday for a few minutes. 24.11 on the S&P, Matt. Obviously, the low at 23.16. By the way, technically, and I know you're an analytical, so it's going to be a hard thing for you to not acknowledge this. 29.47 to 23.16 is 631 points. 631 points on a 2,900 point index is over 20%, Matt. That's officially a bear market.
It's got to close there, though.
It did close on Monday at 20.
It was 20.3%. That's right. On the ES, but not the SPX. The SPX was like 7 points away from it. So if you track the ES, the futures market, yes, from the very top to the very bottom on Monday, it closed at like 20.3%, which is official bear territory. If you're looking at the SPX, it was like 7 points away, I believe. And so it's like a 0.3% downward movement in price was going to get there. You're splitting hairs, right? You're splitting hairs. You're down right around 20%, but there is a psychological component to that though, T, because if you close another 7 points down on the S&P, which would now be about 75 points down, there's headlines there, right? Market's bearish, market's bearish, market's bearish, market's bearish. It creates a psychological component to it. No, so yeah, S&P officially will not be in a bear territory because it looks at the SPX. I look at the ES, we're splitting hairs one way or the other.
It's a bear market. I'm
just saying what the definition is. But yes, it has every look and feel of a bear market.
I agree with that. And first of all, I do expect lower prices at some point. It may not happen in the short term. I'm looking at a bear retracement developing. So I think you've got a short-term rally potential.
I would love a rally coming back up into 2,500, right? You got staunch resistance now at 2,500 to 2,530. And if we do rally another 90, 100 points coming into those levels, Tim, that's forming a really good bearish retracement on a lot of those stocks that are undervalued that are coming back up into now resistance channels. That is another excellent shorting opportunity. And that's the thing about trading these bear markets for people that are fairly new to bear markets. And if you're new to trading, and specifically this is your first bear market, go ahead and let me know there in chat, halftime crew. But you and I have traded a lot of bear markets before, and you're getting in and you're getting out. You don't hold core positions to the downside, right? You're taking your shots, and I think the next good shot is the first great shot was the break of 2,600, then the break of 2,500, 2,500 to 2,300, and now I think the next one is the next retracement. And I said last week, Tim, that the only thing I trust up until last week was breaking of support, but now we're starting to form a pretty consistent downtrend here, T. And those, we'll see if those bearish retracements play out. But if those bearish retracements play out the first time, oh God, watch out. Those traders are going to hit it over and over and over again.
Oh, for sure. And there's always opportunity, whether it's a bull market, bear market, or a neutral market. I want everybody out there to understand something, though. Matt and I have been through this, for 13 years. The first bear market, Matt, we've talked about this on the podcast. Even after 2 or 3 years of training, and I was in the market for about 2 or 3 years,
We weren't ready.
I wasn't ready for it, right?
Nope.
It is one of the most difficult conditions to trade.
Tim, I remember getting our asses handed to us in those
Yeah.
first few months of the market was giving us whipsaw. We learned how to trade in 05 and 06 in bull, right? That's when we learned. Every strategy we did was bullish. We learned bearish techniques, but we didn't do them a lot because, as a new trader, you're prone to do more bullish positions than bearish just because of psychology. But it's also we weren't ready for the speed, the volatility, the uncertainty. We weren't ready for the whipsaw impact. We weren't ready for how news drives the market, and we certainly weren't ready for an unprecedented Fed action in our first bear market. So yeah, I feel like I'm a little more primed and ready to go on this one. But you know what we also didn't have, Tim? We also didn't have a system called Bear Market Survivor Guide. We also didn't have a community like Tackle Trading with people that are willing to help us on a daily basis. We also didn't have the clubhouse. We also didn't have coaches shows and lounges and all of that jazz. You and I were there trying to do this on our own to a certain extent. We did go through proper education, but we didn't have that community and those systems that we have today.
Well, and we have developed the most highly probable indicator there is for when markets are going to crash. Matt, we didn't have this at the time. Just bring Christian Sisson on a podcast, and we'll get the market to crash.
Yeah, in fact, Cody, make sure next time the market hits 2,500, Christian's our guest.
He's our Christian indicator. We love you, Christian.
I'll have him on call.
Wait a second. Did you just say he's the Christian indicator?
I guess
that might have some biblical situations that come arise with that.
Hey, I'm just saying, every time he posts his picture in Tackle Trading, looks like Jesus.
He does have a Jesus.
He's got a Jesus look.
Let's go read the book of Revelations when Christian is on next time.
Fair enough. ES contract obviously rallying here. 2,500 would be a good level, Matt, but you don't know where that stopping point is. Could even be 2,600 if you catch a real big rally.
I've said this, but I'll say it again. When you come into, and it did hit support, Tim, you do have a little bit of support here at 2320 by 2300. So it did rally off of support, but support's not that big of a deal when it comes to, holding these levels. They will get broken easily. You will see snapback buying off them, but they're not. If that market starts selling into it again after a retracement, 2320 is not going to stop it.
No, of course not. In fact, give me a 20-year monthly chart, Matt. I was looking at the big picture this morning doing my prep. And by the way, I am so laser focused on 2019. Forget waiting for next week, guys. I mean, start thinking about your next year. I came in day after Christmas. Everybody's like, we still got the holiday hangover. Nope. It's time to get to work. It's time to get out there and start building. It doesn't matter. And
I still have the holiday hangover.
Oh, I get it, but we're not going to put up with that.
Listen, I was up till 3:00 building some monstrosity for Kat. Don't tell
that LOL.
I don't want to have a Trump 9-year-old movement where I let her know about Santa. So no, it's I'm still, my point is I'm still recovering from Christmas.
Very good. All right. Give me a 20-year monthly though, because, and the thing about it is, one thing I want to point out, the fourth quarter of 2018 was most likely either difficult or kicked you into the sidelines while you waited for things to smooth out. I think most traders, Matt, when they get volatility like that, they probably got beat up, and if you're out there and you're like, well, man, I had a tough quarter, that's okay. Put it behind you. Find peace with it. Move forward and build an edge and build a system. I'm looking at the big picture, Matt. In 2019, it's very possible we could see lower prices. It's very possible we could rally, but I don't expect a doji across the board. You're going to get movement this year. I do expect volatility.
I said this on our prediction podcast in 2017, predicting 2018, and I felt it was the hardest year to predict coming out of the taxes, out of the tax cut from 2017, but also in a rising interest rate environment. So you had fiscal stimulus policy, but you had monetary depreciating policies. And I felt like that was a very difficult thing to project when you're looking at those two things. I mean, if those two things are in line, it's easy. It really is quite easy to project. But if those two things are not in line, it's kind of hard. Tim, I don't know. Like I can paint a picture pretty accurately where you see 50% drop in 2019. But I can also see scenarios play out where later part of 19, you start to see massive fiscal and monetary stimulus is getting back in line to see rapid price growth. So it's a difficult one.
It's a hard one if we're truly moving into a correction, a la like 2000 and 2008. Then we've got a lot lower to go. Now, that is not in the cards yet. We're only 20% down. We've had bear markets that don't go into full-blown crashes, Matt. But the last two times we had those corrections, we were 60% plus on the S&P.
Well,
so we're only 20% into that.
I mean, it's a different time because when you look at every recession and by the way, you can have a bear market without having a recession. Okay. You can, and I don't know if we're going to have that because they typically lead with one another, but there are scenarios where price gets beat up so fast that it recovers to where revenues aren't impacted that much. My dream didn't tell me that, but we can get into my dream down the road. But in terms of this, Tim, you know, yeah, let me just put it like this. If we are going into full-blown bear, then we're going to have so much massive opportunity in 2019, and I'm going to trade that price action until it changes.
There's no doubt. And we're obviously going to be here on the halftime report each and every day at Tackle Trading, breaking it down for you.
Very quickly, for those of you who are new to bear, if you miss a couple signals when you're trading in a bear market, you're fine. You are perfectly fine.
Correct.
You don't have to hit them all, because all you have to do in the next year, if we do go through bear, is hit 3 to 5 massive trades on the downside.
Yeah.
It's really, I mean, yeah, do you want to go hit home run after home run after home run? Yeah, but when you swing like that, you're going to miss and you're going to strike out. Be selective, be consistent, be selective, be robotic.
I agree. Back to the daily chart and buckle up. I got a lot of charts I want to go through. Let's do a little rapid fire here on the S&P. 5 top gainers here today: Chesapeake Energy, Marathon Oil, Kohl's, Hess. Some 7, 8, 10% moves across the board. Most active companies on the S&P, though: Bank of America, Chesapeake, Apple is a 3.6% gainer, Matt. We already looked at that chart. Give me a quick look at PCG, though, by the way. They are down 3.5%. We talked about this one as a utility play, last year. We put it on the Tackle 25. They had the wildfires. We said be cautious about any rally here, Matt. They have proven that they are just not in a good, strong trend. Whenever you have that kind of weakness, it is going to have continued selling at some point.
And let me say something to that, because you should not be touching PCG in any capacity. And
no.
with your great uncle's money that you don't like, you shouldn't be touching PCG. But this PCG and the VIPs are 2 examples of why we're making changes to the Tackle 25 this year. And I'm very excited about these changes, guys. We're going to be launching the latest edition of the Tackle 25 next week. And on that list, in the first 5 years of the list, guys, we haven't done the calculations for 2018 yet, but it's going to be underperforming to the market. With the cash flow, it will be on top of it. But in terms of just directional delta impact, it'll be underneath it, in my opinion. But we haven't done the calculations. But one thing we are changing is, after every earnings season, we're going to be making adjustments to the Tackle 25. And so when you had a situation like the VIPs in the second quarter of 2018, where it had an absolutely horrific earnings report, getting absolutely butchered to the downside, we will be taking those types of companies off the list after every quarter. We don't want to remove a covered call system simply because it goes through short-term bearish activity. Not in any capacity. We'll write covered calls. We'll buy put options in that capacity. But if the fundamentals of the company do in fact change, we want to be able to remove those companies from the list, so that we will be modifying this list once a quarter. And we'll also be obviously doing it every single month with the mastermind group. We're also going to be launching a system off the Tackle 25, a video-based system, very similar to Bear Market Survival Guide, that we are grandfathering in all current pro subscribers. In the future, that system will be a paid course, but for all current paid pro subscribers of Tackle Trading, they'll get access to that Tackle 25 grandfathered in. So I'm very excited about that as well.
And I'm fired up.
Marie, one question. Will US still stay? Well, it's not my list, but US still is still one of my favorite covered call stocks. So I do have some say in the list. I will say that.
Well, and Sam and Yang, we're talking about covered calls on PCG because it's in the context of the list. No, if you wanted a short, I guess it's on the table, but honestly, I
No,
wouldn't
I would
touch
short
PCG.
utilities.
No.
Yeah, I
Or
just
even
don't.
PCG, you don't know what the news can be. You've got
Yeah.
lawsuits pending, you've got all kinds of things around it. The nature of that news makes it pretty untradeable for me, Matt.
No, it does me too, Tim.
Yeah.
I first of all, I don't trade utilities. I'll position or invest in them and do cover calls. But in terms of shorting opportunities, there are so many better shorting opportunities than shorting a utility stock.
Absolutely.
Wait a second, shorting a utility stock in the face of bear. I think there's better opportunities elsewhere.
I agree with that 100%. Give me Amazon if you would. Obviously,
Good
an
question,
S&P
Sam.
component, as well as a NASDAQ component. We're going to go on to the NASDAQ here in a minute. We looked at the chart here briefly, Matt. Obviously, it's at the bottom, looking like it's going to, have a little relief rally. It's up 6.8%. Over the holiday season, it said it had a record-breaking holiday season.
Mm-hmm.
It goes to show another issue with markets versus economy, guys. And I'm sure you're going to have these conversations with people in your life. They're going to be, well, guys, the economy's great. Unemployment's at 4%. Stores are full. Amazon's selling more stuff than ever. You can have a strong economy and strong consumer spending and still have a bear market. Amazon, though, is showing some pretty notable strength here today, Matt.
Even in a recession, we still sell things. Americans do what Americans do best, and that's buy stuff. So yes, we had a great holiday season. And let me take it a step further outside of Amazon, Tim. There was an article on Reuters today that basically said sales for the 2018 U.S. holiday season rose 5.1% year over year to a record, not a record, but over the last 6 years, $850 billion. We spent $850 billion in the last month on stuff we most likely don't need. So yes, retail sales, Christmas season was still very, very good. That's a positive headline. But the economy lags the market. And this is where Blake's question was such a good question on how long can the market stay bearish before it starts impacting company decisions in terms of bonds, in terms of, investment, in terms of borrowing money, in terms of opening up new markets, new product lines, and that's an open question because the speed of this market, in my opinion, will be faster than anything we've ever seen before in terms of the total amount of time from the peak to the bottom. The peak to the bottom in .com took a little over 2 years. The peak to the bottom in subprime took a little over a year and a half. Tim, I could see this going from the top to the bottom in less than a year, but if it takes a year, that will certainly impact companies' decisions that will lead to a recession. If we stay bearish for the next, just say 2-3 months, could we see a market go bearish without seeing a recession? Yes, we could see that.
You could see a 50%, 60% correction in 6 months. Period. I mean, you think about it, we hit the top in late September, early October, right? So let's say that you had another quarter of activity like this, Matt, another 20% on the S&P. You're down 40% in 6 months. Now, I'm not even projecting that. I am waiting to call my projection.
I will give you a projection if that happens, okay? And this is where the difficult nature comes in when you're projecting 6 months to a year out. If that does happen, there will be an impact from A to B. And what I mean by that is if you see another 20% drop in the S&P, Tim, I promise you the central bank will do something.
Correct.
I promise you.
They're going back to zero. Yeah.
They will start slashing rates. When that doesn't stop, they'll go to ZERP. When that doesn't stop, you will see quantitative easing 4. So the only thing we don't know really is how much money will QE4 be, because it has to be for more than QE3. And I've made this analogy before, but Wall Street and the central bank, they're like a drug addict. They are. Wall Street's on drugs. The central bank is supplying the drugs. And when they pull back quantitative easing, it's like this addict just goes berserk to a certain extent. And so the next time you have to give them more drugs and more drugs and more drugs and more drugs. And so if you did 3 rounds of quantitative easing last time and to the tune of $4.7 trillion, $10 trillion in total stimulus, you got to do more than that.
And they can. You think that Bernanke was bad. Wait until we go through another fiscal crisis and watch what the Fed does next time. I'm telling you, economic theory and economic philosophy is completely changed.
Bernanke would have went to zero interest rate once when President Trump called him. Bernanke was a damn coward.
Maybe. I'm not saying this, that, or against Bernanke. In fact, I'm going to be the big Bernanke fan since I earned a lot of the awards of the Bernankes on our last podcast.
You did get a few
He's
Bernankes.
my dude now. I'm going to grow a beard out.
Guy.
Yeah. All right. Obviously, Amazon coming up. You know, one of the reasons I brought it up, though, is that if you look at Walmart and Target, which I actually did some shopping at Target over the weekend, I went and got some last minute stuff, and it was a madhouse, and the shops are full and all that kind of stuff. They're also coming back up. But if I had to make one play for the long term, I still believe that the online stuff is there to stay. These brick and mortar stores,
Target, Walmart, Amazon, and I have to buy one. It's not hard. I'm buying Amazon.
Still buying Amazon at a high multiple in the face of market volatility. Yes. There's no doubt about it. But they're all pretty ugly down here on the bottom. Some of the Chinese companies are also showing volatility today. Give me FXI if you would. Let's talk a little bit about that trade war. And, you know, that was the big theme here for 2018. They put a 90-day shot clock on it, I think, about a month ago. And I don't know if they're going to hit it. I don't know when the exact deadline is. Do you think China for next year would be a better play if you had to buy either the SPY or the FXI, Matt? And let's play a little would you rather here. I'm going to bring Cody in on this one. You got to buy one or the other, FXI or SPY, for the whole year. What do you think?
Next year?
Yeah.
SPY.
You're a patriot, Cody. I'm buying China.
I am too. I mean, you're already further down. The chart pattern is better. See, the problem with the SPY is that you're just at the very beginning part of a chart disruption, okay? And you pull it back and you look at the big picture like, oh, okay, we've got more pain in front of us. You look at FXI and you're like, well, I've got a double bottom down here. We've been down for a long time. Now, could it continue to downtrend? Absolutely.
If you get positive trade news coming out of next year, let's say they hit the deadline on March 1st. Now, China's going up 20-25% next year. S&P will go up 10 to 12.
It's going to be one of my strong...
When have you known a politician to hit a deadline?
Never.
Well, the government is still shut down, right? What's going on with that? I saw like 8 items in the prep, Cody. Are we still shut down over the holiday?
We're still shut down.
Yeah. I'm sure. I think
we don't need to talk about the shutdown because it's not going to stop in the next few days.
We will discuss shutdown probably a little bit more down the road. Not a lot.
I think I'll just say one thing. I think Trump's making a mistake there because in a few weeks from now, the Democrats will control the House. That's not going to make his job easier to get any type of, CR bill through.
I did really enjoy the president's quote when he said, I got to get it exactly here. I can tell you it's not going to reopen until we have a wall, a fence, whatever they'd like to call it. I'll call it whatever they want, but it's the same thing. It's a barrier from people pouring into the country.
Listen, I got some slats in my fence outside too. Can we call that a wall?
Oh, the fence. Let's build the fence.
Listen, all I'm saying is anybody who hopes this is going to be a short-term solution, I don't think it's going to be. I think it's going to be a few weeks.
Yeah, so we can probably revisit that.
Trump he's standing his ground on the wall. The Democrats are not going to give him 1 inch. I promise you that. Now that they've taken the House, the Democrats have power. They're not going to give an inch.
Yeah, good. I mean, that's politics. I like to have discord in politics. I want to have two parties that are fighting with each other. I think it's good for the electorate. I do think you make better public policy that way. That's been a personal opinion of mine. And by the way,
I just want them to all yell at one another and let the capitalists and entrepreneurs and let the free market go. I want all that.
Exactly.
Just call me crazy. Call me an old school capitalist. I just want a free market.
Well, that's the Constitution, by the way. The Federalist Papers argue this. Madison argues this. Hamilton argues you want to have, discord among many different groups. Pluralism is what they call it. We'll talk politics more, obviously, every day that we want to because we love politics. I think it's tied to the economy a lot, too. Move on to the Dow, Matt, if you would. We got to play a little bit of catch up here. Let's see here. Dow Jones Industrial Average.
Dow's done. It's the whole market's doing the exact same thing.
Yeah.
It's all overextended to the downside, short-term buying covering, short-term, value dippers buying and short squeezes. So
value dippers. I like that. That sounds very.
I think that should be a
value dipper.
You're a value dipper.
Give me a little value dip.
So when hold on. So when the bulls make fun of the bears can be like, you're just a value dipper.
Oh,
they won't even know what we're meaning. You're just a value dipper.
We're going to troll them. Let's break down a few of these charts.
Value dippers.
I like it. All right, Home Depot, Matt, real quick. This top gainer on the Dow here today. Home Depot coming up off the bottom. Visa, second gainer on the Dow
Home
here
Depot
today.
coming into 170.
V,
These,
just V, not
you like
Verizon.
Verizon. You want
Yep.
for some reason I'm thinking Verizon.
Same problem in the pattern.
Same problem. Look for the market to recover into 130.
Nike.
And I'm just looking at resistance channels there. Nike at resistance, a little slowing momentum there. Keep an eye on how it behaves. If it gets back up above, say, 72.5, you're back to neutral in Nike.
Microsoft.
That's not a buying signal, by the way.
Mm-hmm.
Microsoft, same thing. Watch a rally coming back into 100, but there's no buy there.
Walmart.
No buy.
Top 5 gainers all kind of in the same type of pattern, guys. One of the things I really like about our halftime report, and hopefully you guys are getting value out of it every day. And I see a lot of the same people coming back. So we've got a loyal crowd there, Matt. One thing I love about breaking down the individual companies, it paints the picture for the broad market index and posture that you should have against everything. Dollar here, neutral in a range. What's going on with the dollar?
Dollar's neutral. That's what it is. It's neutral in a range between 96.30 and 97.70, and until it clears those channels, for the currency traders out there, we're going into currency picking.
Yeah, it's a currency pickers market. There's no doubt about it. Some of them that are going to look better than others. I'm still bearish on the pound. We can talk about that, over.
Well, let's look at the pound here.
Mm-hmm.
And by the way, Keith King did a wonderful Forex report over the weekend, Tim, I felt. And the trade we were looking at making in the Forex report was the rally into 127. And we have confirmation on the downside today, so definitely keep an eye on that. And for those of you who do not trade currencies and don't want to learn how to trade currencies, you should, by the way. But if you're focusing on your stock and options right now in your educational journey, that's perfectly fine. You do have FXB here that you can also trade, which is the ETF that trades the ETF that trades the British pound. You don't have weeklies on a lot of these currency ETFs because they're still fairly new to the market. But Tim, I'm still seeing there are options that are tradable. I mean, you got bid-ask spreads with 79 days in contracts. On the put side at the money, you only got a 20-point spread on a $3 contract. That's not too bad when you're dealing with something that's fairly new to the market. You're starting to see a little bigger open interest on all of these ETFs as well. And so when I'm talking about the currency ETFs, you're talking FXB, FXC, FXE, FX. Those types of currencies that track the Forex market. So there's a lot of ways to trade that, but I do think that's a pretty good little trade on the British pound, confirming off that, short-term rally into resistance.
Well, and frankly, I have no confidence in their parliament, Matt.
Well, nobody does. If you think U.S. politics is bad, just go look at the U.K. right now. But in terms of this, Tim, if you remember, that break of 127 on the pound was a significant break. And so it's going to be interesting to see how it handles that 127 level on the pound dollar cross pair. Right now, showing a little bit of weakness. I like it.
Mm-hmm. Go back on to a couple of the indexes. I want to take a quick peek at the NQ. Obviously, it's going to be leading the way percentage-wise when market rallying. Just a little bit more aggressive, 3%. Beautiful green candle, but we already looked at so many of the components, Matt. These charts are going to be bear retracement setups, a la Facebook, Amazon, Netflix, so on and so forth. In fact, Google's been one of those charts. I was watching that 1,000 level for so long. Give me GOOGL after you break down NQ and kind of look at that 1,000 mark, if you would.
Okay, I'm going to do a real deep dive on this breakdown. It's overextended. Don't buy it.
Yep.
There's Google.
Here's a hard thing. And Mr. Analytical, you got to give me an answer on this one.
Yep.
He did break and close below 1,000, but it was on a shortened holiday session on Christmas Eve.
Still a decent trigger, and I'm sure people triggered into it.
I'm sure they did.
You got snap back, but I'll tell you, you close it under $1,000 again. I'm going to do it again.
I still like it.
Call me a broken record, but I'm not. I don't think anything fundamentally is going to shift this week simply because we have a bearish rally in the market.
Yeah, I guess maybe the question is, you and I know this, Matt. On Christmas Eve on light volume, we don't necessarily take the same trades as we do today.
No, but it's going to be light throughout the week. What I'm saying though is wait for the market to rally into resistance, and then wait for Google to close under 1,000 after that. And then it will be in line with one another. There is something called the top-down approach to the market, where you analyze the market, the sector, the industry, and then the stock. So if the market is overextended to the downside and you have a good breakdown on Google, you might be a little bit more hesitant than if you were, at 2,500 pivoting back down, for example, right? So yeah, if you don't understand top-down, maybe we should do a little something here in the halftime report on top down, but that's basically what we do every day.
Well, especially on Mondays, when we do the full market review where we go through the sectors and the different components, that is just that absolute top down approach. NASDAQ showing a lot of strength, guys, but obviously, and it is a broken record here today. These are all candles and charts from the very, very bottom. You want to look at Bitcoin for a second there? I saw your mouse on it. Did you instinctively want it? Yeah, I saw it.
My mouse was not on Bitcoin, I can tell you that.
Bearish retracement setting up here.
By the way, bearish retracement with the trigger right underneath that 20-day moving average as well.
Yeah, had a lot of weakness, obviously.
I saw the Facebook warriors start pumping up Bitcoin again. I just don't get it.
I thought Facebook actively removed them because it was considered fraud.
Some of them, but I'm talking about people I know.
Yeah, I've been seeing it a little bit more recently. Well, Matt, you could paint a good light here. You could say we're up 30% in the last, or 20% in the last 7 days, right? So of course you can make a headline, but when you look at the chart and you're actually an investor and trader,
I'll go buy it with Cody's money.
Yeah, there you go. Moving on to some of the commodities here. Crude oil having a huge day, 45.44, big green candle. We knew the breakdown below 50 was tradable. It did sell off precipitously there during a couple of weeks stretch, Matt. We're now rallying back 6-7% on this day. Is there anything more significant about that chart than the other ones? No, same kind of deal to me as well.
Hit our price target. You think 42 to 43 was the only price target? You think the tackle traders is the only traders that had a price target of 42 to 43?
Mm-hmm.
Or do you think that every trader who knows what they're doing is looking at that major support between 42 and 43 and they're buying it after it hits support? That's nothing but bearish traders closing positions. I can't wait for the rally into 50 to do it again.
A rally into 50 doji pivot trigger would be a beautiful, beautiful setup. There's no doubt about it. Oil is definitely in a bear market. We don't have to debate the percentage on that. It's been down
40%. There's no debate. 40%.
Yeah. Definitely a bear market. Gold and then silver, Matt. We did hint at silver earlier in the show. Gold has been really strong, and we've been nailing this on the halftime report here for quite some time. Bullish general posture, right? We're at 1272. I think you're at a target if you're a trader, but if you're an investor, obviously not. It's now showing us some strength. 1300 would be the next stopping point from here for me. I know there's some resistance right in there, those old support points. What's your read on gold?
I don't day trade or swing trade gold, so I love the price movement we're seeing in gold over the course of the last 3 months. You're back up to 1270, 1275. You do have a short-term resistance point right here at 1280, and that's kind of what it hit on today. So as traders would go, they would start locking in profit at that resistance zone, but it wouldn't cause any massive correction back down. But gold's not the play today. Gold was the play when it broke out at 1250, Tim. Okay, that was the play. Gold was the play after it retraced into 1240 into that. That was the play. The play is silver. That's the play.
Ding, ding, ding.
Boom. Break.
Beautiful breakout. Yeah.
Yep.
Beautiful breakout. Now, obviously, the futures market is where you would trade if you're looking for leverage, you're an expert and all that kind of stuff. The ETF market is a very common and simple way to play it. SLV, Matt, it's on the Tackle 25 ETF list. I know you see some gapping in there, but that's normal for a product that tracks a futures product that trades 24 hours a day. It's a very, very liquid product, very good product for position traders and investors.
The United States does not own the commodity market, guys. It's 24-hour market.
Yeah, I like silver here.
Very liquid though. Options, liquidity. I mean, you see this break of 14, there's a break of 15 on the futures, but you got massive liquidity in the options market here, Tim. Massive liquidity. I mean, to the point where 30 days out, weekly contracts, thousands of contracts open. You go 79 days out for some type of swing trades, thousands of contracts open. You got all the liquidity you need to do anything you want on silver.
Mm-hmm.
And by the way, I analyzed silver on the commodity, on the futures, but I trade SLV.
Sure. And we rarely bring this one up on the halftime report. Actually, one of the best charts has been palladium for some time now, Matt, /PA, if you would. There's a lot of interest in the palladium market over time. Nice little candle here. It's got to break over 1200 for a new trigger.
Oh, palladium. And I just want to give a shout out to Pete Thomas because Pete Thomas came on our podcast months ago and he said he was seeing stuff in palladium that was a buying opportunity. Palladium's done really, really well over the course of the last 6 months, Tim. I mean, we're talking about upwards of a 33% gain where the market's down 20%. So silver and gold we analyze all the time, but palladium and platinum guys are in that commodity report every single week. So for the pro members, I'm telling you guys, and I sound like a broken record sometimes, but when you're finding a hard time in the stock and the options market, you do have to realize there's two other markets. And you might say, well, I don't know how to trade futures. That's fine. There's ETFs that trade platinum. There's ETFs that trade palladium, just the same way there's ETFs that trade silver and gold. And so when you're looking at palladium here, break of 1200, I do believe that is significant. I do have this currently as a bullish uptrend with a high-based technical pattern, resistance right there at 1200. So a break above 1200, yeah, you got to like that. The only precious metal that hasn't been doing something of late is platinum, and you should stay away from platinum right now.
Yeah, platinum actually still in a neutral to bearish, slightly bearish trend.
Yeah, I could see a rally into 825, and I could see a break of somewhere around 790. So
sure,
I don't trade a lot of platinum, but my point remains, guys. The silver trigger of 15, palladium above 1200, British pound under 1.27. All three of those setups are some of the better setups in the marketplace right now.
Mm-hmm.
All
yeah,
three of them.
For sure.
And if all you do is trade stock and options and refuse to even acknowledge the two biggest markets in the world, futures and Forex, you're missing out on opportunity, especially if you're having a hard time in stock and options.
There's a lot of trades out there, in my opinion, across the board right now. I think that silver trade might be my favorite one for today, as we've looked at everything. But there's some on the option report and the stock report today that I think are great. Coach Cody and producer Cody here was talking earlier, and we were going through a few of them, and we found a few key ones, Cody, that you liked, and Matt, you confirmed.
Yep.
Talk to us about what's grabbing your eye on those reports.
Cody?
The first two that came to my mind were Safe that you have pulled up right now and HLF. So both of those triggered today. I took those trades.
Yeah, I do like them both, and I do like them both because if you do need bullish delta, it's not easy to find right now real good bullish delta, right? And there's no great clean setup in the stock market right now from a bullish perspective. But with the market overextended to the downside, finding a stock that's sitting at support, still in a relatively decent uptrend, yeah, that's a good thing to have some bullish delta on. Here's what I like about Save. Number one, it closed the gap. That's number one. Number two, it closed the gap right when it hit resistance at 50, support at 55. You still have two increasing moving averages in the 20 and the 50-day moving average, and it's setting right smack dab on the 50-day moving average after a doji candle from yesterday called the Morning Star. So, you got to like that from a bullish perspective. Trigger would be above today's high. So if you're looking for bullish delta T, yeah, I mean, this is something that you could find some bullish delta. You got cheap risk with the stop loss right underneath the breakout. Right underneath the low from yesterday is where I would put that. The other one you were talking about was Herbalife, and HLF here. Okay, let's just look at that short term. HLF here now. HLF bullish uptrend, pivot back down into resistance. Now, I was kind of making fun of this pattern earlier today, and I was wrong. I was kind of just joking around. I called it the Snapchat pattern, right? But it's not the Snapchat pattern, guys. And the reason it's not the Snapchat pattern is this isn't technically a pivot, in my opinion. That's just 1-2 days down, right back up. That's just market action. You have an upward movement in price, higher high. You're now coming back, excuse me, you're now coming back down into a rising support level with an increasing 20 and an increasing 50-day moving average. The 20-day moving average is moving rapidly up against the 50, which is showing you a little positive momentum coming into the last 20 days. I like that. It obviously triggered today. You might want to drop it down from an intraday perspective. But if you are looking for bullish delta, bearish delta is pretty easy right now, although I would be a little hesitant given the market's overextended. We expect it to come back up a little bit. But if you need bullish delta, you know, yeah, Herbalife and Save, they're definitely there. Silver's definitely there. Platinum above 1200 is definitely there.
And remember, naturally adding trades in day by day or over time is what traders do. You know, that's how you affect your overall net delta, Matt. If you must have delta in your account, we're talking about hedging, which is different, right? You know, if Herbalife screams and shows you a good setup and you can have your risk and your reward setup all working for you in your portfolio, that's fine. But I have seen a few traders recently that I've started, and they're at an intermediate level, I would say, you know, so they already know a lot more than like the basics. They're starting to have a hard time, you know, keeping their delta in line with their opinion, Matt. And that's something we have discussed in the halftime report over the past. When you're bearish, make sure your account's bearish. You know, you shouldn't rush out and buy everything today just because the market's up 3%.
You don't want to rapidly change your delta on a daily basis. If you're slightly bearish in the market and you think it's going to snap back, rally into resistance, you want to carry a neutral to slightly bearish delta, right?
Yeah.
It's not like you go from, hey, listen, we're full blown, end of the world is happening, -3 delta, let's go do this. And all of a sudden, oh no, market's overextended, let's go buy every company out there. And no, I mean, subtle conservative actions, you know, with purpose.
I agree. And there are still quite a few candidates on the bear side of the watch list. Obviously, the markets today, we're going to be focused on some of the bulls, Matt. But stocks like Weibo,
Yep.
WB, that's sitting on support, you know.
If you need to address your delta rapidly every day, you're trading the wrong time frame. You're a day trader, so that's what you should do.
Yeah.
Anyways, Weibo, what do you want? You want me WB?
There's a lot of bear setups as well. I like that WB breakdown. You know, I'm looking at a downtrend. Break below 53.11 would be very strong.
There are some awesome bearish breakdown candidates in those scouting reports this week.
Yeah.
Wait for the market to kind of settle in, but yeah.
I'm going to give everybody a challenge out there. Make sure that you've gone through the reports by at least this point. I know the holiday might push you back. You want to get through them over the weekend so that you're ready for a Monday morning setup. Obviously, here we are on Wednesday, but a lot of these setups still, Matt, have not triggered. I'm looking at action across the board.
Let me speak to that real quick.
Mm-hmm.
When we're putting something on one of those lists, guys, the trigger could be 2-3 days away, but it certainly could be a Monday trigger as well.
Mm-hmm.
I watch those reports on Sunday is when I watch the reports. Now, I don't technically watch all the reports. I'll just go get the list and do my technical analysis myself, even though a lot of those reports have my analysis in them. So in terms of this, I just go get the list. But if you're new to the market and need the analysis, definitely watch the reports. They're all about 15, 20, 25 minutes long. And so, yeah, get prepared. Do your job as a trader. Get prepared for the market on a weekly basis. Those reports do it. The next thing I want to talk about very briefly is when you're looking at our reports, guys, and you're saying, okay, entry above 1350. That doesn't mean the order's at 1350, guys. Come on, what are we doing? You have to analyze that and apply your rule to that. That is above 1350. That would be the quickest trigger you could be. Stop loss under 13 doesn't mean at 13. It doesn't mean 1290. It doesn't mean 1250. It means you have to apply your personal stop loss rule underneath support is what it means. So my personal support on a retracement is 50%, 50% of the ATR under support. My personal rule on a breakout is 50% of the ATR below resistance. My personal rule on a breakout that has been confirmed is 10% of the ATR above the high and 50% of the ATR underneath the breakout channel. So every technical pattern might have a different rule that you apply to it, and it's your job as the trader to apply your rule. This is not a recommendation to put a stop loss at 13 on Barrick Gold, because if you put a stop loss at 13 on Barrick Gold and it triggers, then all you're doing is getting stopped out at support, and you don't want to get stopped out support. You want to get stopped out under support. So when I say 13, that does not mean 13. That means you have to put it at a minimum underneath that level. Does that make sense?
Yeah. Yeah. I think that it's natural when you're new that little things can get in your way and get you a little bit confused. But the
Well,
reality is, Matt, we're not there to tell people where to put the exact decimal point on their entry and stop.
no,
You know,
you're
Can I
an
add something to that too?
yeah.
Here's also what you don't do. You don't go to these reports, say, hey, it's on the report, I'm going to buy it today.
No, use your analysis.
And actually,
Wait
an
for trigger.
example is Clorox. Look at CLX.
Yeah.
If you just went and bought it, it was a great setup. It didn't go the way we all anticipated.
Here's the setup that we put on the report right there. Slowing momentum, coming into a support channel, and I believe we said, well, let's get the actual number here on Clorox, above 158. So it had a close above 158, which is right here, Tim. So the trigger coming into Monday would have been above 158, which is right into that channel right there. Okay.
Mm-hmm.
So that 158 basically says, okay, the order has to be in above that level, right? It doesn't mean it has to be at that level. It has to be either above that level. Okay. So triggered, boom, got absolutely smoked. Who cares? You're not into the trade, right? So you're absolutely right, Cody. Those lists are technical lists. They're scouting reports. They're not recommendations. But I'll tell you right now how I use them is I get that list every single week and I pick the ones.
And I
think
think
we lost Matt.
No, he's back.
Oh, there he is.
He's back. All right. Anyway, no, we got almost all of that. I think very last like 2 seconds you cut out there for
What I
1
said
second.
is I pick the ones I like and I use my analysis to trade those ones I like. I don't go trade 30 swing trades every single week. Are you kidding me? I'm only looking for 4 to 5 swing trades every week.
Nah, it's like tackle trading is like a wonderful Christmas buffet, Matt. You can take what you want and you don't have to eat everything. Yeah, there's no doubt about it. In fact, I don't know many of our traders who absorb all of our content. You know, I've talked about that, but I will. The halftime crew might. Yeah, and, you know, but if there is one thing, well, we do. If there's one thing I want everybody to make sure that they do get through at some point, it's that System Development 101 course. I mean, it's a free course to pro members of Tackle Trading, in addition to your pro membership. And I don't think we've had everybody go through that course yet. You know, I want to make sure people are diving into it, absorbing it. It's wonderful content. It's very unique. And if you've not finished it yet, make sure you do.
We do so much analytical stuff, right? We do so much system stuff, rule stuff, you know, triggering swing trades, tackle 25, you name it. Tackle doesn't do a lot of mindset stuff, but System 101 is certainly something I would highly recommend to everybody.
Yeah, I think it's amazing, you know, quite frankly. And Maria, I would not have even doubted for 1 second that you've already finished it. You are a power badass user. You're one of our best.
I was gonna say, you know, no, I said halftime crew. No, they go through it.
Yeah, I'm excited to have everybody go through it and give us your feedback. By the way, before we wrap up, Friday, we do our Friday Fun Day. Now, in the past, Matt, we've dropped the poll on Twitter on Thursday. I had asked maybe we can put it out there for a 2-day poll and get people on our Twitter and actually, you know, engaging that and having a discussion. Do you still want to do that today? You want to get our poll out there for content?
Yeah, let's do. We're going to put a poll out there every Wednesday from now on to have our Friday Fun Day. Tim, let's. We'll create 4 topics that we can select and just go over to Tackle Trading's Twitter handle at Tackle Trading and vote.
Yeah, there's a lot of different ideas. Obviously, we could talk about how to, you know, hedge a covered call, how to deal with volatility. Earnings season's coming up next month. Obviously, we're moving into a new year. You've got all kinds of different indicators that we've looked at in the past. Long straddle could work, you know, something like that, a volatility play.
We still got 3, 4, 5, 6 weeks in front of a lot of earnings. Straddle would be good.
Correct.
Straddle, strangle, the difference between straddle and strangled, deep dive breakdown. I like it.
Here's the thing. We'll come up with 4 ideas that fit in line with what we want to talk about, what's going on in the market. Go to Tackle Trading. We'll drop the link tomorrow as well. We're going to put a poll on Twitter. We do it every week for Friday Fun Day. Tomorrow is Theta Thursday, though. We'll see you guys back here tomorrow. Great job, Cody. Great job, Matt. Good to be back from holiday vacation.
Yep.
Guys, if you're out there in your halftime crew, thank you very much. Awesome to have you here again. And we'll see you guys tomorrow
Merry
at the
Christmas,
same
happy
time.
holidays. Be safe out there, guys.